Hey guys, so tomorrow Oatly finally have their Q4 and 2021 report, their earnings call. Their earnings call is going to be at 8:30 a.m. Eastern time, right? And I felt that maybe some of you still haven't had any projections or know what to expect from their earnings call. And just a few days ago, me and Mayur actually did a video, a long video, was about 45 minutes on the expectations on this call. And it's kind of important, right? Especially if you're in the PlantStock community, right? Whether you're in Beyond Meat, Tattoo Shift, very good food company, or actually Oatly, it's good to see if there's one of the PlantStock companies right now that could actually produce some good results. And I think some of us are actually hoping and expecting them to have some good results, hopefully. Especially Mayur was kind of positive when it comes to the revenue side, but we don't really know what to expect from the margins. So I thought just a really quick little video, a clip from what we talked about, could be beneficial for many of you. And if you are interested to see the whole interview, we talked about this for about 45 minutes, then take a look up in the right corner. And on Thursday, when Mayur and me have had proper time to go through the earnings call and the earnings report, then we'll do a video on it. I think the live stream is probably going to be around 10 a.m. Eastern time. So join us if you want to. And guys, don't forget to smash that like button if you want to support the channel, and feel free to subscribe if you're interested in plant-based companies, guys. And feel free to join our free Discord channel down in the description. All right, guys, enjoy.
And on that note, then, so what should we expect on their Q4 earnings and the outlook for 2022?
Sure. So let's open up Excel world here. So here's my model that I just put together for Q4 and for the full year 2022. And I have a couple of notes that I wrote in here as well. So I'm expecting roughly 45% growth in Q4. So that gives us about $184 million quarter for Q4. That compares to 171 last quarter in Q3.
So
And
how much did you say? 184?
184 million. Yeah.
Okay, so because basically, Wall Street is expecting 178, so 6 million over that, hopefully.
Yeah, and I think that's gonna come from just superior distribution. They've been working on issues going on in their Ogden facility in Utah, here in the U.S. During Q3. I think it's going to get resolved in terms of that production hiccup that they had in Q3. And this is within their guidance as well. So they think that they're going to get, this type of number for Q4. So, that's going to be my number that I'm kind of going with here. But what's a little bit more important, or just equally as important, is the gross margin that I'm getting over here. So I think the gross margin for the quarter will be about 21%. So that's going to come down from last year, as well as last quarter. And the reason for that is, again, I think there are ongoing issues with higher logistics costs, freight costs, right? Trucker shortages. And again, delays in that Ogden facility that they were talking about during the last quarter here. But also there's, significantly rising oat prices too. So, this is one of the things that the Fed is looking at, right? Is cost inflation in energy and commodities prices.
But I'm also thinking about, because even though the oil prices is going skyrocketing right now, it has been going up for several months too, and transportation costs will obviously be higher during these quarters. So that will also, I'm guessing, go into the margins.
Exactly. And that's why I think that they will show a deceleration of gross margins this quarter. So my expectation is that it's going to be 21%, which is down from, I believe, 26% last quarter. So that's my sort of expectation there. We'll see where it ends up. And it'll also bring the full year gross margin to 26% overall.
Yeah.
So that's including that fourth quarter hit of, bringing it down to, 21%. So, I'm expecting roughly a 10% growth year over year. And again, that's mostly because of this gross margin hit. So we're going to see a phenomenal growth rate year over year on the top line of 45%. But because of these short-term issues that we're still working through, gross profit will only grow by about 10% year over year during this fourth quarter.
Yeah, just something I got surprised. I'm not sure. Did you listen to that Citibank interview with the CEO from December? According to the CEO, if I didn't misunderstand him, it seems like in Europe, anyways, because they've been there way longer, right? And the production there is probably more efficient. Also, if I understood him correct, they're actually at a profit in Europe.
I didn't hear that, but that would be very interesting if that was the case.
Yeah.
Yeah, that would be very, very interesting if that was the case in Europe, at least.
Yeah. So, but
I
maybe
think they're European factories. If I go back to the so there's a slide that talks about where their factories are and how much needs to be like what is under expansion here.
Yeah.
So it looks like they're okay. So they have plans to expand the Netherlands factory in 2023. So that is an upcoming one. But their factory in the UK and their factory in Sweden are basically fully up and running.
Yeah.
So that would make sense since they have two factories that are up and running
and supplying
and
Europe.
Yeah, exactly. So then it would make sense that they are, at least near break even or even in the profit zone in Europe.
Yeah.
Because of two factories that are now operating at full capacity.
Yeah. So